All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin analysis session here. Hold on. Let me adjust this microphone so you guys can hear me all right. Okay, cool. How's everyone? How's it going, everyone? All right, cool. Here we go. All right. Again, thank you for joining me. So today we have some interesting things to talk about. The title is obviously how to adjust to conflicting signals. I have to say that if there's any way to make money in this game, this is the way. All right. If there's any secrets in this game, of course, no one talks about this. Everyone is focused on the opposite of this, which is basically forecasting. Okay. By having a way to be open to new information, it means that you're open to a random environment. And that's what the market is. There is no order to this. There's no way we can know where Bitcoin is going to be 2 months from now with any degree of certainty. So we always have to keep an open mind. And part of that is being able to adjust to new information, which may be conflicting to the information that we based a trade on. And that's what we're going to talk about here today. It's a very valuable lesson. So I hope you're prepared. Okay, so let me just make an adjustment here. Speaking of adjustments. All right, so I'm simulcasting. So I have my trading view people. Okay, hold on. Let me just move this over so I can see what they're saying, if they're saying anything. All right, so if you're new to the stream, welcome. If you're a regular, welcome. All right, let me just refresh this. So here's how this works. So first thing I'm going to do is I'm going to go over the economic calendar, as you all know. All right, all my regulars know. Then after that, I'm going to go over today's subject, which is adjusting to conflicting signal, which has to do with the Bitcoin chart. So we're going to take a look at that. And then I'm going to answer your questions about stocks or altcoins. So if you have a question about a stock or an altcoin, please share it in the channel now. I'm going to spend some time answering those questions. Okay. Also, if you're on the trading view side here and you can't see me, make sure you refresh the browser, and that will usually solve the problem. Okay, so now would be a good time to start putting those questions in the channel. Also, stick around for the full stream, because at the conclusion of the stream, I'm going to share another trade scanner idea. Okay, we're going to touch on the one from the week before because there's some important lessons in that, especially when it comes to adjusting to conflicting signals. So stick around for the whole stream. If you cut out in the middle, well, you're going to miss the trade idea. Okay, so a week before we called Ethereum short because that was what the trade scanner called that day. Well, I have a new trade to share from the trade scanner, which was called earlier today. And I'm going to share that at the conclusion of the stream. Okay, so stick around and we're going to put that idea together. And then we're going to analyze it next week and see what the outcome was and see what could you have, what was possible, what could have been done with that trade if you managed it in a particular way. Okay, so with all that, let's get this thing started, shall we? All right, so let me just pull my slide up here. Hold on. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now let's get into the economic calendar. All right, and oh yeah, let me say hello to some people. I got my regulars here and I forgot to say hello. All right, so we got Stian. All right, good to see you. Ramin, Armin, Johan, Levant from Turkey. How are you? Supercell, okay. Honestly, you should honestly be followed and learned from. Oh, you are a sensitive guy, but somehow you managed to overcome your sensitive nature. Okay, I'm a sensitive guy. How would you know? Okay, anyway, but all right, it's an interesting comment. We can talk about that. Jade, good to see you. HS, how are you? Long time no see. Howard, all right, cool, good to see everyone. All right, so first things first, like I said, economic calendar. All right, Johan's beaten me to he's gotten ahead of me here, which is good. You're anticipating. So there's not a whole lot to talk about this week, right? I always bring up the economic calendar. You can check the TradingView economic calendar. You can check any one. It doesn't matter which one you check, but you're looking for major economic events that are scheduled each week or each month, right? Usually around the same times. You want to know these events in advance so that you can better manage your risk, okay? So let's talk about, again, there's a light week, right? So I'm not gonna spend much time on this, but tomorrow we have New Zealand has their interest rate decision, okay? That usually comes out sometime, I guess, during the Pacific Tokyo time. So I'm imagining that's gonna be around 8 p.m. Eastern time, something like that. So be aware of that if you're in any Forex pairs across New Zealand, but that's usually not a major world mover, right? So I wouldn't worry a whole lot about it, but I'm going to mention it because it's an interest rate decision, okay? On Wednesday, thank you, Johan, we have FOMC meeting minutes, okay? And that's that usually comes out at 2 p.m. Eastern time. That can be a mover if there are some kind of surprises baked into the meeting minutes, right? It's the meeting minutes. So, you know, most of it is known, but sometimes there's a surprise or the market may react in a strange way. This is particularly important if you trade stocks or futures, because they can be some sort of, you know, strange reaction to that information. Okay, so be aware of that. And then Friday, all right, which is the 23rd, I believe, or the 26th, I believe. Friday, oh no, I'm sorry, is it no, yeah, that's right, that's correct. We have durable goods orders. All right, that usually comes out, I think, around 10 a.m. Don't, you know, make sure you double check the times, because I don't always pay attention to the exact time that these things come out. And the timestamp is not on the calendar that I look at. So just make sure you check the timestamp. But durable goods, again, it can affect somewhat, you know, if there are any surprises, the S&P can move, the dollar can move, right? And if those markets are moving in a dramatic way, your products, whether it's a stock or something else, can be affected. Okay, so be aware of those. Okay, Thursday, unemployment claims. Levant, I was not aware of that one. That wasn't on my calendar. Unemployment claims. What is that for the US? Because usually non-farm payrolls and all that kind of stuff is usually the first week of the month. Okay, so we're now in the third week. All right, so hey, over on TradingView, Noah Trader, hey, good to see you. All right, X, hey, good to see you guys. All right, so by the way, if you like my content and you like my stream, please do me a favor, press the like button, press the boost button, please subscribe to the channel. It helps me out a lot. I am making plans to make better, more content, more educational content for the channel, and you know, that can really help you guys out. So please do that, and it helps me with the YouTube algorithm and all that other nonsense. All right, also make sure you check the links in the description if you're interested in any of the other things that I'm involved with. All right, so next, let's move along. Let's talk about, so we have the Bitcoin situation, right? Managing the trade with the conflicting signal. But before I get into that, and I'm going to make the chart bigger here. Let me just do that. All right, let me just make the chart bigger. In fact, I'm going to mix this up a bit. I'll probably make the chart even bigger like that, because you don't always need to see my pretty face, I realized. Okay, but we'll get to that. So let's talk about real quick the Ethereum trade. Now, where's Alex? Is Alex here? Let me see. Alex, he's not here today. All right. Well, Alex from Romania, he sent me a message about that Ethereum trade. Now, the Ethereum trade was the trade that I shared the week before. Okay, at the conclusion of this session, I talked about this Ethereum trade that was generated by my trade scanner on that day. Now, keep in mind, unlike all these other fake gurus, I'm giving you a trade idea before we know the outcome. And I suggest that you paper trade it so that you can see the outcome for yourself. And you can also see in reality how you would have managed that trade. Now, it called Ethereum short. Okay, so we came up with the orders together here as a group. And I wrote about this too in my article on TradingView. Hopefully you guys read that article. But I want to pull up Ethereum here first, okay? And I want to talk about that trade because it has to do with this conflicting signal lesson that I want to get into here. So let's pull up Ethereum, all right? Where is it? Ethereum. So here's Ethereum, right? Is this the correct chart? I believe it is. No, that's not the one. This one, okay, this one. So here's the Ethereum trade. Now I'm gonna open up this chart really big, okay, so that you guys can see, and we can talk about exactly where this trade was called. Now this is a daily chart. The trade was called on a 4-hour chart. That's the chart that the scanner suggests that you should be evaluating when a signal is called, right? So keep in mind, the trade scanner is like a screener, and it produces a notification when criteria is met. The criteria is my personal criteria, okay? And it's one of the things that I use to come up with trade ideas. So this thing generates a trade idea, and then you have to put the orders together because the robot can't do everything for you. But it's a great tool to learn how to trade better because it's doing all the heavy lifting for you. It's doing all the analysis. All you have to do is come up with the orders, right? And that's what I'm showing you here. That's part of the lesson here and part of adjusting to conflicting signals. So it called the trade here, okay? That's where it called it short. We determined that the entry on that short was going to be 18.15. Now I remember, I don't know if you guys remember, and you guys hopefully wrote some stuff. Oh, there's Alex. Okay, Alex, yeah, good. I'm glad you're here, Alex. The signal, remember that Ethereum signal? What were your orders? You sent me a private message about your orders. Can you share those in the channel here? The orders that you used for your stop and for your price, for your take profit. So this is, he actually took this trade. All right, so this is real, people. This is where the signal appeared after this pin bar, okay? Actually, the time of this signal was actually, by the time we looked at it, the pin bar was in place. This is where the signal was called, okay, on this candle here. These are 4-hour candles, right? So 4 hours after the signal was called, right, this candle closed, and then we got another 4 hours, and we got this bearish pin bar. So we determined that the entry price was going to be 18.15, right? Remember that, you guys? So 18.15 was here. This is 18.15, okay, where I drew that line there. See that? So there you go. Look, 18.15. He put his stop at 18.65 and take profit at 17.40. This thing was calling a short. So let's just put these orders on the chart because he actually used this at the time of the trade. All right. So he put the take profit at 17.40, all right, which was, let's see, way lower. Let's pull that up here. Where is 17.40? 17.40 is like way lower. This is 17.40 here, okay? This is 17.40, okay? Now you'll see in a minute why I'm talking about adjusting to conflicting signals. That's the take profit, and the stop was 1865, right? 1865. Let's put it on the chart here. 1865, right here. Okay. As you can see, let's zoom out a bit now. As you can see, right? You can see how the orders were placed. The stop was here. The take profit was there. That was a 1-to-1 reward risk based on the ATR, which you can see on the bottom of the chart here, right? The 4-hour ATR. And this is what he determined by multiplying the ATR times 2, which got the risk, and the ATR times 3, which gave the take profit, right? That's the order placement routine that I'm trying to teach people to use. Now, here's the thing. The trade was called here, okay? That's where the robot called the trade, I believe, right there, okay? Yeah, again, let me open this up again. I'm sorry, I'm wrong. It was called it on Monday. I'm sorry, I got the wrong candles. The trade was called here, all right, in that area. That's where the trade was called, right? So now, here's my point about adjusting to conflicting information. Look how the market transpired since it made the call. Was there profit in this trade? There was. I mean, the lowest point since the call was 1772. It never made it to the take profit, okay? It sort of came close, but this, it never went to the take profit. So what do you do? Well, first of all, look at the price action since the call. You had this initial, like as soon as you got in pretty much over the next 8 hours, it made this low here, okay? 1798. Now, if you're watching that and you're like, wow, okay, I got a little green, chances are you're not going to really do much because you're trying to give the trade a chance, right? So I would say in this area, there's really not much adjustment opportunity. But if you're watching this now on a 1-hour chart, because again, you can use a smaller time frame once you're in the trade, right? Let's see what kind of price action we got on a 1-hour chart, because what kind of conflict do we have on there? All right, let me zoom out again. So this large rectangle here is where it was called, basically, okay? Now, look at the conflicts. You have an inside bar right there, okay? You have another inside bar, failed low, double bottom situation there. All right, this is on an hourly. So yes, it requires some babysitting, okay? Look at the inside bar over here. So what do you do in these situations? Well, a couple of things. For one, Are you going to be able to take your profit at these lows? Probably not. Okay. This is why initially we set up take profit. Those orders that we set up initially here. Let me make the chart bigger so you guys can see it. The reason why we set these orders initially, right? These orders, the take profit and the stop, those are to define our risk and to give us a 1.5 to 1 reward risk ratio, right? To start off the trade. We don't know where the trade is going to go. Markets are random. So when the market gives us new information, that's when we have to make a decision. We have to be proactive with these. So when you see a reversal candle, an inside bar, right, on an hourly or a 4-hour, that can call for adjustment. There are two types of adjustments that you can make. Can anyone tell me what they are? Okay, well, so Alex, look, Alex is ahead of me here, right? He says raise stop loss into break even. That is one of your choices. All right. Now, a lot of people don't like to do that because, again, you're still stuck on greed, right? You're still stuck on, oh, I need to make money. I need to make money. You cannot be greed or profit oriented. I know we're here all to make money. I understand, but you cannot be profit oriented. You have to be risk oriented. If you're thinking, okay, well, I want to mitigate risk. I want to mitigate risk. And this thing gives you a hard time. One of your choices is move your stop to break even. You would have gotten stopped out, obviously. Okay, this line here is 18.15. So you would have gotten stopped out for break even. Now, that's mitigating your risk. Is there anything wrong with break even? No, because you can have 10 break evens. You can have 9 break evens in a row, right? That 10th trade wins, you're ahead. There's nothing wrong with break evens. Break even is mitigating your risk. Now, another option that you have, another choice that you have when you have a conflicting signal is take something off the table. So let's say you shorted one coin, right? The equivalent of one coin. Maybe it's a futures contract. Maybe it's the coin itself, whatever it is. You short one coin from 18.15, okay? And this thing makes the low. Let's say it makes the first low here. What do you get? 17.98. So you have maybe $20 in the trade if you're in the full coin. Maybe you take 30% off. Or maybe you take half the coin off when it's going your way and it gives you a hard time. I mean, if you closed that at 18.12, you would have basically broken even, okay, on partial. So, but you're still reducing your risk. This is going to happen, right? You may be like, oh, I don't like the conflicting signal. Let me reduce my exposure, okay? And without moving the stop to break even possibly. Or maybe you do, and maybe you break even right away. That's okay. Maybe you hold on to it to give it a chance because, you know, we do have this stop in place for that purpose, right? And you had 2 other opportunities to take a little something off the table when it pushed these lows and gave you a hard time. Okay, so my point is, you know, if you're in a trade like this, there's no reason to take the full stop. Right? The whole purpose of the full stop, again, is if the market, you know, you short this thing and it goes straight to the stop. You know, some stupid news comes out and it goes vertical and you're protected from that. That's the purpose of the initial stop. But it doesn't mean you're going to take that full amount, okay? If you have an opportunity to reduce that, you take that opportunity. Because over time, if you're reducing these stops, that is how you improve your performance, okay? So that's Ethereum. That's the Ethereum trade. It was worth something, all right? Not a whole lot, but at its best point, it was worth, what, 1772? So that's about, what, 35, 40, 50, almost 50 points, something like that. So it's not a lot, but still, there was some green involved. And my trade scanner, it has a lot of trades like that, where the trade was green at some point, but it never went to its take profit and it turns. So you either make your adjustment, you move your stop to break even, you take something off the table. You know do you see where I'm getting at with this? It's a mindset thing. There's no perfect way to do this. There's no perfect way to say, well, I know here it's going to go here and I know it's going to turn there. After the fact, we can say that, but going into it, we have no idea. Okay. Now, I mean, look where Ethereum is now. I mean, it should not, if this thing was a short, it should not be behaving like this. All right. Now, since then, Bitcoin was called a short, right? A couple of days after, from like 27,300, which again, it offered some green. But then I noticed the trade scanner started calling some longs. And like, that's strange. So the trade scanner a lot of times starts to get signs of things early, right? Basically, you can think of it as like the internals are starting to change. Just like when the market is kind of strong, but then the trade scanner was calling a bunch of things short. I'm like, that's strange. Why is it calling things short, right? So that sort of gives you a sense of internals. It's a conflict. You can think of it as relative strength versus relative weakness. That's another valuable way you can use that information. Okay, so now before I get into Bitcoin, let me show you this. Any questions about that Ethereum trade? Anyone else take that trade? And I'd love to know how you managed it, because again, that's the key. There was green, just not much. Okay. When there's no conflicting signal, hey, you have nothing to do. You let the thing do its job. But when there is, you have to be proactive. That's what separates someone who never makes money from someone who actually starts to grow their account. Okay, so let's talk about Bitcoin here, right? And before I do, let me just do this. I want someone to write this on a piece of paper. Okay, so this is Litecoin, right? Write this on a piece of paper. Let's go to the 4 hour. Okay, Alex or someone who's going to stick around here. Write this on a piece of paper. What is the ATR on the 4 hour? This is a 4 hour chart. Okay, and as you can see, I have the ATR on this chart. It's a 4 hour chart. Take note of that, Alex. 4 hour chart. And what does the ATR say there? 1.995, right? We can round that to 2, can we not? So 2 points. Write that in your notes. Litecoin, 2 points, ATR. All right, on the 4 hour chart. I'm emphasizing that like 1,000 times. Okay, so let me get back on here. Okay, cool. So you guys see that? All right, cool. Let's move along. So let's now go to Bitcoin. All right. So we're going to put Bitcoin, we're going to pull Bitcoin chart up. Hold on, let me just get this over here. I'm going to pull the Bitcoin up. Actually, I'll pull it off of this. Where's my Bitcoin chart? All right, is that the one I want to see? Yeah, Bitstamp. Actually, yeah, we can use the Bitstamp. Actually, no, I should pull up the 8-cap chart. That's where I have my my analysis. So let me pull up 8-cap. Oh, that's not it. Hold on. Sorry, just give me a second, guys. Where's my 8-cap chart? Here it is. Okay, so that brings me to Bitcoin. Now with Bitcoin, I'm going to remove this. We don't need the ATR anymore. Okay, so you guys can see the chart real big. And again, we're going to talk about how to adjust to conflicting signal. Let me see how I'm doing over here on TradingView. You guys over there? You guys paying attention over there? What's going on over here? Let me see. All right, cool. Oh, you know what I forgot to mention? Hey, if you guys want to mention what country or what city you're from, that's always a fun fact. I'm streaming from the greater New York City area, and that's why I talk funny. All right, so cool. Good to see you from Netherlands. All right, thanks for joining. So let's talk about Bitcoin, and let's talk about the conflicting signal, which again is the topic of today's stream. Like I said before, if you like my content, please press the subscribe button. Please press the like button or the boost button, and I would appreciate that very much. Now, what do we have going on here? As you can see, my squiggly line, right? That was the trade idea that I had called the week before. So the Saturday before, I believe it was Saturday, I sent out an idea. I sent one out on TradingView. I also sent one out privately to my community with more context. And the trade was called, if you guys remember, was at 27,150. Okay, so let's put that on the chart. 27,150 is right around here. Here, 27,150. Okay, that's where the trade, it looks very similar to Ethereum, does it not? So this is where the trade was called. Okay, right around here, basically. Long, 27,150. Now, not too long after that, when I was streaming the next day, we had this, and it looked great. It was following my squiggly line. Okay, but since then, as you can see, it has failed. Now, on Tuesday, of the previous week, I think it was Tuesday or Wednesday, I sent a message to my members and I said, this thing has a conflicting signal. Okay. Now this is the 4 hour. Let's go back to the larger time frame. Okay. And I sent out a message saying, we have a conflicting signal here. Let me make this big, because a market that's squeezing or a market that's rallying, or basically the premise behind this trade idea that I called, should not behave like this. I should not see a candle. In fact, I described this on my previous stream. I said, if we see a conflicting signal, you got to do something. You can't just sit there. This is not, this red candle that I'm highlighting right here, this red candle, that is not bullish momentum. It should not close like that. It should be following this line. See, but the market doesn't do what I want it to do. The market doesn't do what I think it should do. The market does whatever it wants to do for whatever reason. Don't beat yourself up trying to figure it out. Accept it, okay? Accept the price action. That's called having an open mind and being able to adjust to a conflicting signal. This is conflicting. So as we just talked about with Ethereum, you have to do something if you're in a swing trade and you get this, all right? And as you can see, since then, right, Bitcoin has gone nowhere. And like I said, my trade scanner called a short in there, right, which was worth a little something, kind of like that Ethereum trade, but it's not, this thing is not progressing. Do I believe that this thing is a short? Well, no, let me explain why I don't. So we can get rid of this squiggly line because that market doesn't, the market rejected that scenario. Now keep in mind, when I draw a line or I draw lines on my charts like that, that basically highlights one scenario of an infinite number, one scenario that I'm anticipating, right? Because I believe that that scenario has a higher probability. I don't know if that scenario is going to play out, right? I don't pretend to know, but it has a higher probability. So that's what I'm looking for. And anything that goes against that scenario means I need to adjust because the market is not agreeing with me, okay? So once I got the conflicting signal, I sent the message and I said, do something, whether take a small loss, break even on it, do something, mitigate the risk. And I asked people in the channel, I said, hey, how have you guys done with that trade? And most of them answered that they got out, okay? And they took a small loss or whatever, which is, that's an acceptable answer. That is a good trade because when there's a conflicting signal, there's no reason to take the full stop. The full stop on this trade was 1,500 pips, points. So if you got away with 100-point loss or something like that, that's a win. How's that a win? I lost money. It's better than losing 1,500 points, okay? If you're able to reduce your risk to something that small, but when you win, you're winning 1,000 points, you're winning 1,500 points, you're winning 2,000 points. That's how you put your account ahead, all right? So now, what about Bitcoin now? And why don't I think that this is a short? Even though the scanner called this thing short, I don't believe this is a short. And again, it's my opinion, it's my perspective, but I'm looking at levels, okay? And what I see here when I zoom out, something that the scanner cannot do, right? The scanner can only see a limited amount of context. I can see more context. So here's what I think, all right? Or here's what I see. This level here has yet to be compromised. So if this level stays intact, which is the 25K support, I'm interested in another long. Of course, I'm going to have to see reversal, which would be a conflicting signal if you were short. Does that make sense? I'm not short. I'm looking for longs. The scanner calls it a short, but I don't have to follow the scanner. I follow my own judgment, right? If I agree with the scanner, great, I have something to do. If I don't agree with the scanner, I do nothing. So here it is, right? If we can retrace into here, which I suspect we will over the next few days, possibly, then we have an idea that can turn into a retrace back up into the 28K area. And that's the line that I drew on my chart, on my trading view thing here. And it looked like this, right? I drew like this little thing over here, right? And then I drew something that looked like that, okay? That's the scenario that I'm anticipating over the next week. Do we get that? I don't know, okay? But if I see the beginnings of it, I'm willing to take the chance that that's the scenario that we get. But as you see, I don't just jump in front of this thing. I don't just say, well, I think it's going higher, so I'm going to buy it, right? That's a novice action. Does that make sense to you guys? Now, another thing I want to point out is this. This thing is going to have a hard time going higher until this resistance is cleared, okay? Here, let me draw a little rectangle there. See this resistance right here? I believe that until we take that out, that's a lower high. Until we take that out, we're going to have a hard time. So this is why, you don't want to get involved in this thing too early. Take your time. There's plenty of opportunity to get involved here. All right. So does that make sense? That's a structural argument. Lower highs often lead to lower lows. Now you say, well, that's a bearish trend. Well, this structure, price structure, notice the words I'm using. This price structure that I just highlighted there in that large square, that's a retracement structure or a minor bearish trend within a bullish structure, a broader bullish structure. This is bullish, okay? This larger rectangle, that's bullish. We're just retracing a portion of it. As long as 25K is maintained and respected, I suspect we hold and go higher, at least test 30K or the high 29, high 20s again, at least, right? I'm not more optimistic than that. Like, I don't believe we're going to 40K or 50K or anything nonsensical like that. Anyone that says that, they're just, I hope most of you can see through that by now. You should be able to if you've been following me long enough. But I suspect at least test of 30K is within reason, and I'm willing to take a chance for a swing trade if I see the setup that I just described. Does that make sense to you guys? Okay, cool. So that wizardly blue rectangle, blue, yeah, I'm not sure what you're talking. Oh, you're talking about this when I had this over here. Yeah. So again, it's just a level, right? So I primarily look at, I don't get all caught up in the news and all the drama. I mentioned the economic drama that's going on right now, which is just senseless. And then we have a NASDAQ making new high after new high after new high, right? It doesn't make sense. But that's because you're trying to make sense of something that's irrational, right? When you're playing a random game, you don't try to make sense of it. You just accept it. And then whatever information it gives you, you adjust. You don't sit there and say, well, the Treasury Department can't pay, they can't pay their bills back. How can the market be going higher? I'm going to short it. You can't say that, although that would be the logical answer. The market does whatever it wants to do. Just respect the market. It's better to be ignorant and respect the price rather than the other way around. But everyone chooses the other way around because it's the conventional thing to do. Well, I'm informed. I listen to the news, and that's why you don't make money. Okay, so that's the Bitcoin analysis, and that's how you manage yourself around or adjust to conflicting signals. Now, do you guys have any questions about that? Because what I say may make sense, but when it comes time to taking action, it all goes out the window. I get questions like, what do I do now? Were you not paying attention when I explained it that one time? So please, let me know if you have any questions about that, right? But that's the key thing. When something is not agreeing with your scenario and there's a clear reversal in your face, you do something. And that something should be adjusting risk, something that's going to reduce your risk, whether that's taking something off, right, reducing your position, or moving your stop, okay? So those are the key points. Now, let me see how I'm doing here. I got plenty of time. So let me see what kind of questions we have. I'm going to answer some questions, and then we're going to get into next week's trade, okay? I'm going to share the trade from the trade scanner. Again, if you're not sure what the trade scanner is, I know I talk about it a lot. It's a screener that I developed with my personal criteria. The notifications appear in a Discord channel, okay, in my community channel. That's where they appear. There are two channels. There's the stocks and there's the coins, right? And it produces notifications in the channel. And it tells you long or short, basically look for setups on a 4-hour chart, and it gives you a symbol and a timestamp. You can get push notifications by basically setting up, your phone or your mobile device to get push notifications from that channel. That's how that works. Hopefully everyone's using the push notifications, right? And then you get the notification, and now you have an idea to work with, right? And like I said before, it's doing most of the work for you. You just have to come up with the orders, right? And that's what the whole ATR thing is about, the average true range. All right, by the way, I'm doing a webinar on that in 2 days. I don't have the link here to share, But if you're on my email list, you'll get an invite. In fact, I think a reminder just went out about an hour ago. So I'm not spamming you. It was just a reminder. All right. But if you want to come to that webinar, it's around the same time as now, but it's on Wednesday. All right. So get on my mailing list and another invitation will go out on Wednesday. Okay, cool. So let me move along here now and let's get into your questions. I saw some questions earlier. Let me know if you guys have any questions about this Bitcoin thing. Let me know if you have any questions about how to adjust to conflicting information. Like I said, that's really the key to making money in this game. All right, not maximizing your profit, not using some kind of 99% win rate robot nonsense. All that garbage that they feed you is all lies and nonsense. Okay, I'm trying to deliver the reality to you here. And that's what I do here every week, every Monday. I try to deliver lessons of reality so that you can better protect yourself and protect your capital in this game. That is my purpose, you know, for doing this. And I like to think of myself as the retail trader advocate, because I've been in your shoes. I've been in your position for many, many, many years losing money. All right. And I couldn't figure out what the problems were. Eventually, I figured out what the problems were. And I'm trying to tell you what the problems are. Okay. So, all right, let's go over your charts. So like I said, people, now usually this is when everyone cuts off the stream. I'm going to share the trade idea, the new trade idea, before I conclude this session. So stick around. All right. So Stian asks, hey, Stian, CHZ USDT. Let's take a look. CHZ, let me pull that up here. CHZ USDT. All right, wants to know what I think of it. All right, so this is an altcoin. And here's the thing with something like this. These altcoins, by the way, a lot of them have been just complete garbage. When you're looking for some perspective, first thing you do, look at a weekly chart, okay? Let's zoom out here on this weekly chart. And here, let me just make this bigger for you guys. Let me just do this for a little bit. All right, you don't always have to see how nice I look. So look at this thing, right? I mean, since these ridiculous highs from way back when, this thing has been basically consolidating, we can say, on the midterm, because look, you have a range high here, you have a range low there. As you can see, there's really no progress being made. It hasn't pushed new lows, although you do have a lower high established here. So if you take out 98 cents, which is the swing low over here, let me just highlight that. If you take out this level here, which is basically trying to do, and you close below that, then a lower low is likely to follow. So if you're thinking about investing in this thing, first, forget swing trades. I wouldn't bother swing trades. I wouldn't bother with swing trades for this. Something like this, you're better off with one of the major coins, you know, Litecoin, Ethereum, whatever. Something like this would probably be more of like a longer term investment, or like what I like to call inventory. And this is just not, unless you really believe in what they're doing. I don't know. I don't see, if you're going to build inventory, Stian, here's what I would tell you to do. Because again, it's very risky. This thing can go to zero. Don't assume that these coins are just because they've been around for a little while. Oh, it won't go to zero. These can, and many stocks can. Now, sure, a stock like Netflix is not likely to go to zero, but a coin like this can go to zero. So if you're going to start, if you want to accumulate inventory, consider that zone right there, okay? If you're going to build some, and I wouldn't go crazy with it either. 1.25 cents, right? In that area there, if you want to start putting on some coins to hold on for the longer term, that would be the place to consider it, because those would be extreme lows on this thing. I don't even need to look at a daily chart, because all we need are the levels on something like this, right? So you want to look at those lows. You have a lower high. Chances are that lower low is going to be revisited, especially if Bitcoin gets a little hammering, right? If Bitcoin tests 25K, possibly breaks it temporarily, possibly, you know, you may see that test of low and possible lower low. If you're going to take on some, that would be the place to do it, because that's when everyone's banging it out. All right. And again, like I said, you don't want to put on an uncomfortable position, something small. At least you're getting good prices. All right. That's what I have to say about that. I hope that it helps. Okay, let's move along. Let me see what you guys over here on TradingView are saying. All right. All right. Can you explain the basics of the ATR and how it works? All right, so I've done other streams about that. I'm not going to explain that now, but I'm going to talk more about the ATR on my webinar on Wednesday. So if you want to come around for that, just get on my email list. You go to my website, sign up for my email list, and you'll get the invitation in the email. And I'm going to be talking about the ATR there. But it stands for average true range, and I'm going to explain further how we use it. The whole purpose of how I'm using that is to basically come up with a routine way for you guys to come up with order entries, orders or order placement without having to spend hours in front of a chart trying to figure out where to put your orders. Hey, Nico from Belgium, much better than my, oh, okay, cool. All right. Drak, how are you? Kalamazoo, all right. Good. I had no idea you were from there. Cool. Thanks for letting me know. And good to see you again. All right. Noah, is 31K local top? All right, with the wave, okay, the wave counts. Listen, man. Now, you sent me that question on the wave counts, and I appreciate people reaching out with questions like that. I'm not trying to make you feel bad or anything. I'm glad you guys come to me with your questions. Don't overcomplicate Bitcoin. Don't overcomplicate the wave counts. So, when the mistake people make is they're trying to map out all the counts to get some sort of sense of accuracy. Don't use it like that. It will drive you crazy. Okay. Instead, just look for impulse structures. That's all you have to do, because that's really where you're going to get the most value. The question that you need to answer is, are there 5 waves present? 5 waves complete? Do I have 4 waves complete? Right? Those are really the only the questions you need to answer. So to say 31 is at the top of, what you say, wave 3 of 5, I don't know. All I can tell you is when I start counting, right? If we're going to count like that big, you're saying wave 3 of 5, right? And we go back here like this, wave 3, 5 of what, right? So are we going to count these big waves back here, or only looking at this recent impulse? If that's wave 3 of 5, this impulse right here is certainly not a 5 if you're talking about relative to these other waves back here. Does that make sense? So in my opinion, you have 1, 2, 3. This looks like a 4, has an overlap to 1. This is a 5. So wave 3 of 5, I don't know. I think we're more of in a corrective structure here, right? So we have 1, 2, 3. We have some sort of A wave completed. That's what it looks like here on this time frame, right? The broader you look out, the better. Don't get caught up in all that little nonsense, unless you're looking for short-term impulse structures. Okay, does that make sense? I don't want to spend a lot of time on the wave counts, but I'll tell you, it can get very confusing. Don't overcomplicate it. All right. One thing I learned a very long time ago, because I used to overcomplicate it too. Long time ago, when I was taking my CMT exams, we had to take these review classes, and one of the moderators said, what I'm telling you, don't overcomplicate the wave counts. Just use it to identify the current trend that you're in and see what structure you're in, and then anticipate the next structure just for that magnitude, and that's it. And once I started doing that, it made it a lot easier. Okay, so good question. Thanks for asking. So now, this guy is Supercell. You honestly should be followed and learned from. You are a sensitive guy. All right. Must have been painful. How I overcame my sensitive nature. What makes you think I've overcome it? I'm nuts. What do you think? Why do you think I don't have a girlfriend? No, I'm joking. It's just, look, it's just things. It's just the way it is. I mean, you just, if it's something that you're good at or something you like to do, you just continue to do it. I mean, look, there's been many times when I've just like, this sucks, I want to quit. Of course, everyone goes through that sort of thing. This is a hard game, right? I like to think of it as, this is like playing the NFL. The NFL is not an easy thing to be in, and it's very competitive, and you don't hear about the people that never get there, right? You only see the stars on TV. So it's a tough game, and you just have to stick it out, right? And you just have to keep persevering, and you have to keep just, going forward and searching within yourself. I mean, I don't know what to tell you as far as that, but over the years, certain things just occurred to me that allowed me to get to this point. Realize that I spent about 15 years, I'm going to say this really loud, 15 years I spent getting nowhere, pretty much, because I couldn't get over certain things, like the inherent lie that's baked into everything in this business. And that lie is that the markets are here for us to make money. We can make money. You know, technical analysis gives us some kind of advantage, right? Everywhere you look around, you see that kind of nonsense. It wasn't until I accepted that markets are random. That was like the turning point for me. Markets are random. That started to change the way I think about my trades, the way I manage my trades, the way I would forecast, or I thought I was forecasting my trades, right? That changed everything when I realized these markets are random. You can't forecast them. It would have been nice if someone told me that. But instead, everywhere you look, oh, I'm going to show you a 99% win rate system. I'm going to show you my magical secret. I'm going to show you this. I'm going to show you that. And it's all a big lie. Okay? It's a lie. This is the most deceptive business in the world, and I hope to get that across to you. All right, anyway, hope that answers your question. I know I'm getting out of hand over here. Let's move along. So let me see here. Just move along. I'm looking. Okay, Matic. Johan wants to see Matic. Sure. Let's take a look, Johan. All right, you guys stick around, because in the next few minutes, I'm going to go over the next trade for next week. All right, Matic. Let's take a look. So Matic, this is one of the coins that my trade scanner calls, because it's one of the top capitalized coins. And look, Matic is just very sensitive to Bitcoin. When you look at these altcoins, again, I jumped over to the weekly chart. Use Bitcoin as your point of reference always first, okay? If Bitcoin is going to rally, most likely this will find a support. No matter how bad it looks, it will most likely find a support. The mistake you are likely to make is you make the judgment on this chart alone. Oh, it's bearish. If Bitcoin isn't bearish, chances are this is not going to be bearish, right? This is why when I see conflicts in my trade scanner, like Bitcoin long and then Ethereum short, I'm like, that's weird, right? So one of them is going to be off, right? And usually Bitcoin is the heavyweight. Bitcoin is usually the leader. And that's why if I see that conflict, best thing to do, stay out. Don't judge these charts in isolation. But let's look at the levels though. So you have this level on Matic, 69.01. Basically, you could say 69 even, or 69 cents. That's a support, clearly. Okay. Going forward, you have a resistance level here. Even though we tapped above it briefly for like 2 weeks or whatever, right? And then we're back below it. So those are your key levels. Those are the levels that you're working with right now. I would not touch this thing here, all right? Until, again, you start pushing those lows, right? Around that, what is this again? I said like that 69. So you could say low 70s. What is this right now? 86.91. So low 70s would be a higher probability location to get involved if you're thinking about a swing trade. But if Bitcoin is failing, then don't expect that support to hold. Does that make sense? So this location here is your high probability location. Let the market test it. And if the market doesn't test it, then at least wait for some sort of reversal, okay? You have an inside bar on the weekly chart from the weekly previous week, and that's at 90, the high is 90.16. So if you take that out, you can argue that that's a buy signal. But since you're not coming off of a high probability level, okay, that 90.16 is probably here. Yeah, that's what I thought. That's this level here, okay, basically. If you're going to take a trade like that, you should probably, it would be wiser to go smaller because your risk is greater. Does that make sense? I can't tell you how to trade. I can't tell you what to do. I can make suggestions, all right? I don't want you to think that, I'm going to tell you what to do and you're going to make money, because really it all comes to how you manage a trade. I can tell you what I think the market may do, and the market may do something else because markets are random. All right, so good question. I hope that helps. Okay, let me see how I'm doing with time. All right, so in a few more minutes, and then I'm going to go over the trade idea. So I hope you guys stick around. Let me see what I got here. All right, so that was Matic. All right, so Levant, ZN1. All right, Levant, I was looking at this earlier. Good question. All right, so this is a 10-year note. You guys should be taking a look at this thing. So we have a lot of drama right now with the treasuries. As you know, there's a lot of news, a lot of nonsense, a lot of people talking, right? Look at this chart. Now, we have this means, right, these are the bond futures. So if bond prices go lower, That means rates are rising again. Look at this. We broke this support on the ZN1. We broke that support, and this is not looking like it wants to reverse. Although it's in a fake out area, I don't see any fake out yet. Okay. Now the market is not reacting to this because the NASDAQ is still on its highs. What is up with that? Right? It makes no sense. The NASDAQ, by the way, is only driven by a handful of stocks. So the NASDAQ 100, don't go by that. All right, because it's not a very accurate view of what's really going on in the world. It's like, Netflix and Google and Amazon, all the conventional mainstream stocks that everyone celebrates. That's what drives that whole index. So keep that in mind. It's not an accurate view of the world. Now, what the bonds are telling us here is that rates are rising. Stocks don't like rising rates, but the thing is, it's not a one-to-one relationship. So this price action that we're seeing in the bonds right now, I believe is going to catch up to the stocks. So when you take a look at something like this, right, it's a good idea to pull up something like the S&P, right? SPX, let's take a look at the SPX, USD, because this is a little bit more, look at this, right? The S&P is sitting on its high at 4,200. What are we at right now? Today's high was 4209. This thing's at 4192. I mean, this thing barely moves. But look where we're sitting. We're just lingering here. Okay. If we were going to sell off, I mean, we should be selling. This thing should be pulling back. It refuses to pull back. But it feels very artificial. I don't know what to make of that. But what I'm saying is, with the bonds doing what they're doing, it limits this. So what that tells me is this is an extremely vulnerable situation. And this is the worst place. This location right here is the worst place to be buying stocks or investing in stocks. And the stock market's rallying, I'm just going to buy it, right? Because look at Apple, right? If you're going to be mindless like that, this is where you get fleeced. So although it's not pulling back right now, it's not about what it's doing right now. It's about the probability of the location. I wouldn't go near these things, okay? If you're going to buy stocks, swing trades, or longer term, wait for this level. All right. We may not get that low, but that's the range low. That would be an ideal level, not where we are now. Does that make sense? This is all about managing and assessing risk, not assessing where the market will go. Okay. Good question. Now let me see how many. Okay, a couple more minutes and then I'm going to go over the trade. By the way, since we have this up here, let's just pop the NASDAQ up real quick. All right. Let's just see what kind of nonsense is going on there. Okay, we're up right now at 13,859. We're up 71 points without any. This thing just refuses to pull back. Right? You see that? That's what I'm talking about. NASDAQ 100. This is nonsense. Although this is turning into a continuation pattern to go higher. That's what that looks like. Will it go higher? I don't know. How much higher will it go? I don't know. But it's certainly not a great area to be going long, especially with the S&P looking the way it's looking. Okay, so, and that all goes back to the bonds, because if the bonds keep going the way they're going, that puts a limit on where these are going. Does that make sense? Because rates are rising. Strange time though. All right, anyway, let me move along here. Okay, Notash, can you check CFX? I thought it was a short. Okay, what do you think about it? CFX USDT. All right, I'll take a look. Take a look. CFX. What is that? CFX USDT. You thought it was a short. You thought this was a short? I don't know. Okay, so let's go to the weekly chart. I mean, right off the bat, this is not a short, at least not on the short term. Look at this. So on the weekly chart, something has changed in this stock, in this coin. I don't know anything about this coin, all right, CFX, but this price action here is certainly bullish, right? Higher lows, higher highs. It took out some resistances, like this resistance was taken out. And also it looks like, let's see, you have a resistance around this area. All right, in fact, I'll draw a rectangle in the area, right? You have a resistance right around this area here. And it looks like it rejected that resistance and it's produced a higher low. There's a buy signal in place from a couple of weeks ago, bullish pin bar off of a previous support. Look at that, bullish pin bar. This is not a short, at least not right now. All right, if this thing is going to be a short, it needs to break these supports. It's respected the support. You may have thought it was a short because you're looking at time frames that are too small. Don't use unless you're looking at day trades, right? Unless you're considering day trades, you should not be using hourly charts or 4-hour charts. If you're thinking bigger picture like swing trades, you should be looking at daily charts or weekly charts. Do not use smaller time frames because you're going to think it's a short because you're going to get caught in this nonsense. And all it is a higher low. Okay, so I don't know, that's not a short. Not yet anyway. So that's what I could tell you about that. All right. So if I missed your question, I apologize. I have to move along now because I have to talk about my trade for next week. Okay. Do people? Okay. All right. Thank you for answering that question. Looks more bullish. Okay. Well, gold, Ethereum against gold. All right. Okay. Can we look at gold? All right. So I looked at the bonds. All right, I'll do gold real quick because gold is something I'm very interested in. Gold, theoretically, first of all, using logic, which is something we should not use, gold should be going higher, right? With all the nonsense and all the craziness that's going on in the world, gold should be doing better than it's doing. Now, I think a lot of people got caught up here with all the nonsense and all the hype about gold, banks failing, blah, 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 right? Gold should be going to 5,000. Everyone buys it, right? And everyone gets caught. Now, gold has pulled back into a support area. The 1950 area, right? 1950, 1960, those areas, those are places to consider swing trade longs. Now, as you can see, we get this inside bar, all right? I think that was Friday's candle, and it's trying to take that out. If you take that high out, which is 1984, then you have a new buy signal for a swing trade on gold. I am generally bullish on gold, and I do like to see pullbacks like this. It's the same idea as Bitcoin, right? I would be looking for a retest of this area here, at least the lower 2000s, if we get a signal, right? We have the setup, but we don't have the entry, right? What's today's high? 1982. So it needs to clear 1984. And of course, your stop will go somewhere like around 1950. You're looking at about a 30-point stop, which is typical for a swing trade on gold. But you're looking for, a possible 50 or 60-point move on gold to at least test the high. That's within reason still because this trend is still generally bullish. Now, you have to be careful, though, because, again, that's what the chart says. But we do have some conflicting things like the bond market and the dollar, which is fighting this thing, right? That's why we saw this pullback. There was a little rally in the dollar, and we see that also reflected in the bonds. So be careful with that. I wouldn't go crazy with this gold situation, but if that trade goes off, that would be a swing trade to consider. Okay, so I hope that answers your question on gold. All right, let's now jump into the next trade idea that was called by the trade scanner. So earlier today, I was looking at the trade scanner, and it called Litecoin, okay? Litecoin, it called it as a long. As a long? Huh, that's interesting. Litecoin as a long. Now, this is Litecoin on the daily chart. The reason why, now we're going to go to a smaller time frame because the scanner is using a variety of smaller time frames. This structure right here is a bullish momentum structure. So that set this thing off and basically said, okay, look for longs. So let's go to the 4-hour chart, okay? And let's see what's going on here on the 4-hour chart. So when there's a move like this, I mean, look at this move. Talk about Elliott wave. You want to talk about wave counts, okay? Short-term wave counts. 1, 2, this is 3, you're in a 4. All right, that's it. That's all. That's how you use it. That's how you use the wave counts. And 5 is likely to follow, okay? One more leg higher. Anyway, that has nothing to do with the scanner. But let's talk about the scanner and where it called the long. So it called it from, if someone wants to put the price in the channel here, I think it was like 91 something. I'm LTE, so I'll watch. Oh, okay, no problem, Han. Thanks for stopping by. All right, so who has the actual order for the Litecoin? Can someone get that? If someone's here, maybe Robin or someone who has access to that. But I believe it was called here somewhere. Let me just make this bigger. All right, so we can establish the price of the long. Now, one thing about the trade scanner, sometimes it'll do something like this. It'll call a long or a short, and then in maybe 8 or 12 hours or 16 hours, it'll call another long or short in the same product, the same instrument, but at a better price. What's going on there? Why does it do that? Well, because you have a situation like this where it bounces off certain levels, right? It bounces and the criteria is met and then it's not met, and then it's met and then it's not met. So that generates a few notifications. I can't filter that out because if I do, then it won't call anything at all. All right, so we have to deal with a little noise. There it is, Raman, thank you. 91.59, it was called, okay, at the timestamp 6:20 today. So that was obviously earlier today in the AM Eastern time, right? So let's put the price on the chart, 91.59. Let's put it on here. So where is that? 91.59, right here. Okay, this is it right here. So it called it long, and that was probably around this green candle. It was probably this around here, or like this little spike, like this doji or a spinning top type candle, right? So it probably called it somewhere in here, right? So that's where it called the long. Now, when you get the long notification, it doesn't mean you just jump in at that price. You have to look for some sort of setup. That's the instruction that comes along with it, right? So now what do we have? So we know that this thing was called a long. Let's consider the trade idea. So how would we put this together? First of all, we looked at the bigger picture, right? And we recognized, because we used some context, that there is a leg higher that's possible, right? The wave count says we can get one more leg higher. So that long makes sense, right? In light of that. But now we need some sort of entry. Right now we're at 90.78 and the price that it gave us was 91.59, right? So we have an inside bar here from the previous 4 hours. You see that? We can use that inside bar. The high of that inside bar was 91.42. So it's a little bit better than what the scanner called, right? So it's almost the same price. So we can say 91.45. So let's use that price. You guys write this on a piece of paper. Litecoin long, 91.45, right? For next week, it's a swing trade long, 91.45. So if the price goes back up there, you should have a buy stop to go long. You don't sit there and wait to place a market order. You place these orders in advance, right? It may never get back up there and the trade may never become active. But chances are the way this thing's fooling around, it probably will tap that number, okay? You may say, well, why not buy it now? It's a better price. Because this thing needs to show some sort of evidence, some sort of proof. Taking out the previous candle high, especially if it's an inside bar, that's a type of confirmation we want to see. You don't just jump in here because this thing may continue lower, right? Does that make sense? So we've established the price, 91.45. I'm going to put it on the chart here, right? 91.45. That's the entry for the swing trade long. You place a stop. So buy stop, 91.45. Now, what about our stop and what about our take profit? Can you guys tell me the number I gave you earlier to record? What was that number on the ATR? Can anyone tell me? Thank you, Steen. Steen put it over here. 91.59, momentum reversal coin. Right, bullish momentum reversal. Okay, so what was that ATR number? I asked you guys to write it. You guys write it? Thank you, Noah. Thank you, Levant. Thank you. 2. It was like 1.99, whatever. We're going to round that number to 2. So that's 2 points on a 4-hour chart. Okay. So we're going to multiply that number by 2 and we get what? Thank you, Howard. We get what? We multiply 2 by 2. What is the answer? When you multiply 2 times 2, we get, who can tell me? Come on, this is easy math here. Come on, you guys. You don't have to be an engineer to do this. I know it takes a little time for you guys to get the message and then put it in the channel, so I'll wait. You multiply 2 times 2, Levant, right? So we're looking for the stop. So 2 times the ATR of 2 gives us what number? I want you guys to give me the number. I know the number. I want you guys to give me the number. Thanks, Noah. All right. So we know that it's 4. So that means the stop would go 4 points. We're going to add that number because we're looking for a, I'm sorry, we're looking for a long here, right? So we're going to subtract that number from the entry. Does that make sense? So 4 points from the entry. Thank you, Howard. So 91.45 right? So what does that give us? 4 points. Was that 87.45? Is that the price? Let me see here. Yeah, I think it's 87. Am I right? So that's where your stop would go. Let me put it on the chart. And you guys should be following along and doing the same thing. Yes, thank you, Johan. 87.45. So let's put it here. Okay. Right there. That's the stop. So your entry is here, right? This trade is not active. You're not in it yet, so there's no risk. But if this trade becomes active at 91.45, your stop goes here. Now, that's what the ATR tells us to do. So we don't have to sit there and do all kinds of analysis and blah, blah, blah. We say, okay, 2 times the ATR. There's our stop. That's a reasonable place to put the stop. And in the context of the structure, it is. Because look at that low. It's lower than that low. So if this market is going to go higher, it really has no business going here. So that makes sense, okay? Just using some extra context that the ATR, cannot account for. So what's 3 times the ATR? So the ATR is 2. And now we multiply that number times 3. Okay, who can tell me what that is? My engineers, please. Where are my engineering PhDs? What is ATR 2 times 3? You guys should know that. Thank you, Han. So 6. So now we add that number to our entry, right? Our entry of 91.45. So what price does that give us? What price does that give us? So we're going to add that to 91.45, and we should get what? 97.45, right? So that puts it all the way up here. Okay, that's pretty wide. That's our 1.5 to 1 reward risk, and those are our initial orders. So that's the trade idea for next week, and this comes straight from the trade scanner. Step 1, we identified an entry price. Okay, even though the trade scanner gave us another price, we looked at the price chart. We determined what the entry should be. Okay, that was step 1. Step 2, we used our ATR to determine a stop and a take profit. There was no, I have to analyze this and I have to check the wave count of that. There was none of that. All we had to do was use that, and now we generated a stop placement. Okay, 4 points lower, and a take profit 6 points higher. That's it. That's all you have to do. That's the routine. You do this the same exact way every single time. Now, these are the initial orders. Like I said earlier, are these orders going to stay this way? Is this like, permanent? You guys tell me real quick. Is this permanent? Are these orders like, is this it? Like we're just going to set and forget and walk away? Is that what we're going to do? What are we going to do? Who's going to tell me? Because we have our plan. This is our plan. And the market is going to activate this or not, right? If the market never touches this order, we never take any risk, right? So we know that. But if it touches the order and it taps the order and makes it active, and this trade becomes active, and again, I suggest you do this on paper. This is a learning exercise, okay? Don't take this with real money. I suggest you do this on paper. This is how the trade scanner works. And I'm trying to educate you so that you learn how to use this. And even if you don't use my trade scanner, you're still learning how to put trades together. Okay, Babysit Levant says, okay, Snagger says adjust. Right, these are not permanent orders. You're going to be open to adjusting them. Be prepared. If we get conflicting information, the stop may have to be moved to break even. The stop may have to be cut in half. Maybe you have to take some profit off the table if this thing goes your way and starts to give you a hard time there. Maybe you should take half of it off the table if there's a conflicting signal, like we learned in today's lesson. Okay, does that make sense, you guys? So that's the trade idea. In the next week, what we're going to do is we're going to come back to that idea, right? So you guys write that in your notes, write that somewhere where we can go back to it and look at it, because now, again, we don't know the outcome. You have a whole week to play with this thing, see what kind of scenarios the market throws at us and how you adjust to them. And that's how you're going to learn. So do that, and then we'll talk about the outcome, just like with that Ethereum trade. There were some small profit opportunities with that Ethereum trade, but overall it was a break-even trade, and that's what we're gonna, on the record, we're gonna call it a break-even trade. Or you want to be more fair and call it a small loss. You want to be more accurate. Okay, fine, you can call it that too. It wasn't a winning trade, although there was some possibility of taking some green out of that. When you get good at taking some of that green out, those trades are like, okay, they're just trades that don't really go anywhere. But if you don't really lose anything on those, right, and then you get a big winner along the way, that is what puts your account forward, is not losing or taking small losses, or basically get trades that would turn into a stop. You managed to break even on them. That is how you move your account forward. All right, so I hope you got something out of that. Guys, let me know if you have any questions. If I missed your question about a particular market, I apologize. I can't go through everything in this limited period of time. You guys know where to find me. Again, if you like my stream, press the like button, press the boost button, subscribe to my channel. I appreciate it a lot. Also, if you'd like to reach out to me, send me an email. You can reach me at Mark at Mark Pre-Markets. Okay, that's the best place to find me, the best place to reach me. And I try to respond to those as soon as I can. Sometimes it takes me a little time, but that's the best place. Okay, so if you have any questions about the trade scanner or anything else, let me know and I'll be happy to answer them. Okay, you guys. So again, I hope you learned something, and I hope you got something out of this. Again, next week we will go over this trade idea with also with a new lesson as well. I'm trying to make these streams a little more educational, so that we can not just analysis, but more of mindset and how we can learn the trader mindset, because that's really the key to this game, is having the appropriate mindset for having an open mind and being able to adjust to random information, which is what we're always dealing with. Okay, you guys. So all right, let me just see what this says over here. Okay, cool. All right. All right, you guys. So again, thank you all for taking taking the time with me here today. I hope you enjoy the rest of your day, or the rest of your evening, wherever you are in the world, and thank you very much for watching.